Hey everybody, it's Andy with Overdrive Accounting, and today's video I'm going to show you how single-member LLC owners file their taxes. So you can see here on the screen we have a Schedule C. Now a Schedule C is just an additional form that is filed with your Form 1040 when you report all of your annual income for the IRS. So you can see here profit or loss from business activities. You have the name of the proprietor, the type of business that you are performing, your name, your address, the accounting method, and then most importantly you have here your actual reporting of your sales and expense figures. So you can see here we have gross sales 327,000, cost of goods sold of 250, which brings us to our gross profit. Now after our gross profit, you're looking at your just daily expenditures for your business activities. So in this particular example, we have advertising, insurance, office expenses, supplies, taxes, and licenses. Okay, and that brings us to a net profit of $67,853. Now, Schedule Cs are used for single-member LLCs and also sole proprietors who don't have any other entity classification. So the way a Schedule C works, it is a pass-through entity, which means it just flows through to your personal 1040, and that's where the tax is assessed. So we can see here the 67,853, and now we will jump over to the 1040 and I will show you how all of this works in your personal tax return. So you can see right here, it's actually reported on Schedule 1, which comes through here, the deductible part of the self-employment tax, which is half of the self-employment taxes. For anyone that doesn't understand what I mean by self-employment taxes, also known as payroll taxes, the more common names for them are Social Security and Medicare. Now, usually the way it works, if you're an employee, you pay half of the self-employment taxes or payroll taxes, 7.65%, and then your employer would match. When you're self-employed, you pay both the employee and the employer side, and you are able to deduct part of the taxes, the self-employment taxes, on your 1040 to reach your taxable income for income tax purposes. Okay, so then you can see that the business income comes through right here on line 6, 67,853. Our net profit from our Schedule C activities, and then we'll bring us down to our adjusted gross income. Now the difference between these two numbers is just listed here on Schedule 1. That is the deductible part of the self-employment tax. Gets us to our adjusted gross income, which we will then use our standard deduction for a single filer. The next aspect here that we are going to be addressing is the qualified business income deduction. Now this is going to be about 20% of your net profits from your business activities, which will also lower your adjusted gross income so we can get to our taxable income. So line 10 here is taxable income. Frank's looking at taxable income of $40,847. Now with that, he's going to be looking at $4,921 of income tax. So you can see that here on line 11. Okay, so then we're going to come down, and right here you can see line 14, other taxes. Now this is one thing that self-employed individuals are always going to be trying to avoid or reduce, and what this is self-employment taxes. So we come over here to Schedule 4, you can see self-employment tax of $9,587. Now where this is coming from is from the net profit of your business activities. You are going to be paying 15.3% of your net profit, and this has nothing to do with income tax. This is after income tax is assessed and then added to. So you're not considered taxed twice. It's more like two different taxes assessed on the same income, if that makes any sense whatsoever. Okay, so then if you take your income tax of $4,921 and add your self-employment taxes of $9,587, you come to a total of $14,508. Now with My Tax software, it's going to be calculating the estimated tax penalty, and that's where this $470 comes in, and that's just being tacked on for the total balance of $14,978. And that is how you can read your tax return as a self-employed individual. You can go back through, and just for a quick recap, we can see the Schedule C. This is where your income is initially reported. You'll have your gross income, your cost of goods sold, which will derive at your gross income. You will then take into account your expenses to arrive at your net income. From your net income, it'll go to Schedule 1, where it's again reported as business income. 27 will report the deductible part of your self-employment taxes, which will flow to your Form 1040, which will get to your adjusted gross income. Then you will take out your standard deduction, your qualified business income deduction, which will get you to your taxable income, where then your income tax is computed. Schedule 4 is where you will find your self-employment taxes. Back to your 1040 is where they add your income taxes to your self-employment tax, which will arrive at your total tax bill. Thanks for watching, everybody. If you have any questions or videos that you'd like to see, comment below. We'll be sure to respond to you. If you don't want to wait for any videos and you need help with your income taxes, follow the link below to overdriveaccounting.com. You can schedule a meeting, or you can just give us a call right there. We'll be glad to help you out, see what we can do for you. Thanks for watching.